Good afternoon, everyone. Today is Wednesday, the 4th day of March, 2026. So, lots to talk about today. Options stuff, new stuff with regard to options. So many things. First, let's do this. I always forget to do this. If you haven't taken a free trial with us, go to tvtrades.ai, tv-trades.ai, and just click here, go down to the bottom, sign up for the trial down there. Okay, I always forget to do that. If you have not signed, the next webinar, this is for, let me see if Robert is in here. Robert, you are in here. Okay, it says you're in here. For anybody who is not signed up for next week's webinar, if you want to sign up for next week's webinar, you can always go to targetviewtrades.com. It's always going to be right here, the homepage at targetviewtrades.com. You can sign up for the next webinar. I know this says 225, but it's going to say next week when I update it. It's going to say next week, but it's the same link. All right, I'm keeping that link rolling. So you just click on that, and you'll be able to sign up for the webinar. I have to update the date, obviously. It's going to say 3/11 after today. All right, you can always go here, targetviewtrades.com, the homepage. Click there, and you are also getting emails about it. Every single webinar that I do, you're getting emails about it. If you did not get 3 emails from me today, or at least 1 from me today, then you need to check your spam folder. And some of you might have gotten 3, some of you might have gotten 1, some of you might have gotten 2, because I sent them out in different groups, but there's 1 that went to all subscribers, so everybody should have gotten at least 1 today. If you didn't get at least 1 email from TV Trades, then you need to look in your spam folder. Okay. Alright. That is all of that stuff that I got out of the way. Quick. Now I want to spread this out so I can see everybody who's asking questions. And Mark Z, you said something about this webinar. Hang on, I gotta start at the top of the questions. Okay, audio's good. New arrow, I'll show you that in a minute. Wayne, John, Dan, this is what you're looking for. You're looking for it to go through the blue like this, and for the red to just, you can get to the edge like that, or come out of the cover. That's what you're looking for. Okay, so like I said earlier, when it happened right here, you would have sold the open of that bar. Okay, when it happened right here, you would have sold the open of that bar. Okay, when it happened right here, you would have bought the open of that bar. That's how that works. Okay, Dan. And good afternoon, Bengat. And Robert, did you catch that? That targetviewtrades.com page? You can, Jimmy, it'll minimize the number of trades that you have, because you can easily get into overtrading. If you take every single one of these, you can easily get into overtrading. But if you want to stick with the trend, you put the mid bands on. I don't have the mid bands in the new thing. Or maybe I do. Yeah, I do have the mid bands in the new thing. So to stick with the trend, you just put the mid bands on, and you trade in the direction of the mid bands. Okay, if they're red, you take the shorts. Okay, if you want to follow the trend, but you don't need to really. It's a reversal signal, and it happens on the very next bar. Okay. Let's see. So this right here, this was it's straddling the midband. That's why I gave you the purple arrow to go short right there, on the purple bar to go short. But you also, well, that's not exactly reversal signal there, because the blue is not in the center. Okay, the blue is not in the cover. But what I really want to show you guys, that I think you're going to be interested in, is this thing right here. Now, let me just go and see all the way up to the top. Kurt's not here. Alright. Does it have to go from cover to cover, i.e. from sell cover to buy? No, it doesn't. It doesn't. It can switch right in the middle. Dan. Like this right here did a minute ago. You guys remember a few months ago I was working on this thing, this guy, the scalp tool, and one of the first things that I did with the scalp tool was the fade. You guys may remember from a few months back, about 6 months ago, and I worked on that, and I got the fade to work pretty well, and then I made it an adjustment to the fade so it made more sense with the bar going down, with this line going in the right direction that you're going to be trading and all that. Well, then I created the synthetic divergence, which is a whole different thing, uses a whole different mathematical formula, and I created the synthetic divergence thing because it uses synthetic time frame that I created. And it was brought to my attention by one of our guys who's been around for a long time that the fade works with the synthetic divergence as well, but he had narrowed it down to some other things. But I just want to show you. I want to show you a couple things first of all. Okay, I'm gonna hit when you have this little purple thing right here. That means there's an update. If you click on it, it'll say check what's new. You can click on that, and then you can go down here and see what the latest thing that I did was. Okay, in this case, the latest thing that I did was improve the tool to recognize synthetic divergence is selected, to deselect the bar color, and I got a typo in there, but added the cover to automatically update when synthetic divergence is selected. So you can see the things that I did in there, right? And if you do update to latest version, if you have update on all charts checked, it's going to update on all the charts. So I'll just do that, so it'll update on all the charts. Now, the thing that I want to show you is this. One of the updates that I made to that, if you put the TV Trades range trigger on there. Okay, we'll put that on there. And in the TV Trades range trigger, you have to put in the password, right? You can put in your password, which, I'm going to change that pretty soon. But put in the password, and then when you do that, it automatically turns the bar color on. Okay, now when we're doing the synthetic divergence trades, you don't want that bar color on. It changes everything to blue, green, and red. Alright, well, mostly blue. But if you click on synthetic divergence, what I changed in here, if you check that, it adds a synthetic divergence, it changes the line style down here to step line, and it gets rid of the paint bar. It does it all at once. Alright, so that was an update that I did. I don't know when I did it, but fairly recently I did that update for you guys to make it easier. So when you put on the TV Trades range trigger, if you want to trade with the synthetic divergence, all you have to do is put in the password and click synthetic divergence. Okay, if you take it off, everything goes back the way it was. You see the paint bars are all back. That's back to a line. If you click this, it adds a synthetic divergence, changes the blue one to a step line, and takes off the paint bar. Okay, that is one feature that I added for you guys to make it easier, because I know it's, when I first create things, I create it and then I want to get it out to you guys because you guys want to see it, you guys want to use it, and I want to get it out to you guys as quick as I can. But sometimes I put it out when it's kind of clunky. It's not that it doesn't work, it's just that it's hard to put on your chart and get it working properly. So I fixed all that down there with the synthetic divergence for you guys. Again, for anybody who's new in here, if you don't know what the synthetic divergence is, because we trade everything on range bars, and most things on range bars, the synthetic divergence, getting data from another time frame is complicated with range bars because there's no time value associated with range bars. So what I did is I created my own time element within each range bar based on the data within the range bar. Okay, that's what the synthetic part is synthetic time. And I've created the divergence tool down here based upon the synthetic time that I get from each bar. Okay, that's what that is. So, that was a lot of words. The option stuff. Robert, are you listening? Robert, you got to type into the question box if you're listening. Robert G. You texted me about this last night. And, well, if you're not listening, then you'll check it later. I created this, so you guys have access to this. Okay? Now, this is at a shared link, right? You don't have access to put this on your charts yourself. You don't have access to the tool, but you have access to look at it. And this updates real time, all day long. So there was a short in here. I had, I'll show you. I had everything set to go for today. Okay, you are listening. Okay. Well, the last week when I did this, I went through and picked out all the things. I went through and got all the values. And I want you guys to realize that account, that options account that I'm working at, it only has like $5 in it. I created that account. It's a sub account. I created that account on purpose so I can go in there and mess around with things and have it recorded without worrying about anybody, wanting to strip that from me and steal my $5. But this is what I had earlier. Now, KMI was the only call option that we had earlier. But you see, things have changed, and that's no longer a call option. This was just a half hour ago. I had done all this. So, you see, this is constantly updating. Now we don't have any call options, but we did have one a minute ago. But you can see some of these, the ones that are highlighted like this, those are with the trend. Alright, the ones that have the full highlight, I don't know why the puts are doing the full highlight on that. But the ones that are highlighted all the way across, those are with the trend. Okay. No, when you have to click on the link, in that, I'll show you. In the TV Trades Options channel, hang on, let me slide this over. There you go. In the TV Trades Options channel, I pinned it up here at the top. This is the link right here. Okay, Wayne, you can go click on that right now. Click on it right now, and it should show this once it loads up. You have to be logged into TradingView. But once you're logged into TradingView, if you click on that link, you should be able to view what I have going right here. You won't be able to make a copy of it, but you should be able to view it. Okay, and that's in the TV Trades Options channel. So you guys have to have access to get into the TV Trades Options channel, and that is only on Telegram, Robert. Hopefully you managed to get into Telegram. If you guys are getting into Telegram right now, if you're just getting into Telegram, my ID is @ trading_I_Q. The @ trading_I_Q. Send me a message and I'll add you to my list. Okay. All right. Now the stuff that I put in there, Wayne, in the room in the morning. TradingView only on your computer. Okay. Well, that's okay, Wayne. You can read stuff in Telegram on your phone, but you can forward that link to yourself from your phone, or I guess I can just send it to you. I'll just send it to you. Okay. Remind me later. Send me a message in Telegram to forward you the link. All right. I'm going to be changing this link, so you need to figure out how to get it from Telegram, because I'm going to be changing this link regularly. All right. It's a simple thing for me to change a link, and that allows me some sort of security, and people won't be giving it out to everybody. But if you go and click on it right now, all you guys that can get into the TV Trades Options, go in there and click on that right now, and you should eventually get this thing up here. Now, it takes a bit for it to load up because it scans. Every one of these has to go and scan and do a request for every one of the symbols. And this last one is always going to give a few less because it's got a few less. There's still room to put stuff in. And, we talked about a couple weeks ago, if you guys had anything you wanted to add in here, any symbols you wanted to add in here, just let me know what they are, okay? They have to be, they have to have volume and open interest and stuff like that with the options. But I'll add them in here if they do. And then they'll be thrown into the mix, okay? I know there were 3 symbols from last week, and actually one of them was in the list today that Jessica had asked me to put in. She had asked me to put in 2 weeks ago, I think. It was, here it was, the QQQ. She asked me to put that one in 2 weeks ago, the SPY and the QQQ. And that's in there today. It's a put, 612 put is what it's suggesting right now. Okay. The SPY is in there. The SPX is no sense in doing. You can't trade options on that. But the SPY is in there, Gordon. So if that one comes up, you'll see it. Okay. Yes. But I put the QQQ in too. Is that why you get the list very last minute? Yeah, that's why you get the list very last minute, because I'm trying to give you the most updated stuff. And it's really kind of a pain for me because I got to go in there and update it at the very last minute. You guys can now see this, and you can go in there and see by the prices which ones you're most likely going to use. If it's $320, that's going to be an expensive option. But if it's $78, that won't be as expensive. The price of the actual stock. $612. Normally that would be an expensive option, but it's actually not. The QQQ is not that expensive. But if you go and look at those things, like where's that thing that I just had up? Oops, that's not it. This thing that I just had up. See, this one's 200 put. That's $292 for that option. All right. This one here is 405 put, but it's only $1.05. I mean $105 for that one. But everything here times 100 is what it costs to buy one option. Okay. Before the close, yes, Wayne. Usually 3:30, 3:45. If you're only going to do one or two, then just go in there and pick the one or two that you're going to do. For me, it's a pain in the neck because my mic is not off, Gordon. For me, it's kind of a pain in the neck because I got to try to get in there and get all these things that are updated at the last minute. Like right now, this is not the same list that I have right here. This doesn't have any puts in it. DHR is not in this list. I got to go. What I got to do is I got to go through these, and then this isn't the final thing you do. Once you get this, then you go and make sure that they have the cross. Okay, like all these things right here. These are all the ones that were in the list a half hour ago, and you see I only put the ones in here that actually had the cross. The cross being the synthetic divergence crosses the trigger inside the cover. It crosses the trigger inside the cover on its way out. See, KMI, it was that way a half hour ago, but it's not right now, so KMI would be taken out. I mean, KMI has been completely removed anyway because it's not even in the other list now. It's not even in this list. We don't have any calls in this list right now. So they're all puts for tomorrow. So if we have a big update tomorrow, those puts aren't going to do very well. Which brings me to another thing. Now, usually Monday, Tuesday, Wednesday, we're choosing the current Friday's options. But we don't always have a war that started last weekend. So it'll cost you a little more money. But if you choose next Friday's options today, I mean, tomorrow definitely choose next Friday's. Tomorrow and Friday definitely choose next Friday's. But maybe even starting today, you want to choose next Friday's options because these that I'm showing you right here were this Friday's. But they're all going to be puts. And if we have a big update tomorrow, I don't know if we will, but if we have a big update tomorrow, then all those puts are going to get beat up, and you're not going to have any time left in them for them to recover. The ones the other day that I had. Let's go and see those. These. Did I do them? Yeah, midday. But we had that huge down day yesterday. I think it was yesterday. The day before yesterday, something like that. When we had the huge down day, these were all call options. The puts obviously were up over 100%. Every one of the puts were up over 100%. But the call options got beat up at the beginning of the day. By the end of the day, it was a little bit better. The call options started to come back. And these ones that are still in there, I don't think any of those really came back yet. They still have 2 days left in the option to come back. But now they're going to lose time value really quick. The theta is going to kill it right now. These were the ones from last night, all right, that triggered today. And these were the ones. You see how KMI was there? It was the only call, and KMI is no longer there right now. When did I do this? Well, this was 11:43. This was the midday, 11:43. But look how different that is from this right here. If I bring that back up, where was it? Okay. See, a lot of them are different. Like 3M, Cisco. Ford, I guess, is still in there. Intel still in there. Tesla still in there. Hood's still in there. AMD, ANET, Avgo, those are all still in there. Bax, that's a new one. QCOM, these two right here are new that I didn't look at. USB, TXN, QQQ, those I did look at. The USB I didn't look at. So I might just stick with what I have already, except I'll take the KMI one out. The MO keeps coming and going in there. So let's go look at MO and see what that looks like. Here, I'll put it on this right here because the KMI is coming out. So that's Altria. And it does actually have the cross right there. Okay, so that's a call option with the cross. This is what you would be looking for right here. So then, once you see it's got the cross, then you go to your options place. Now remember, I created this account. It's got $5 in it, just so I can take it out here and show it to you guys, show you how it works, without worrying about you stealing my $5. it's not you guys that I'd worry about, but it's anybody that sees this on YouTube. But see, this is going to be a call on MO. So all the stuff that I told you, if you click show full quote, the delta on this is 66. Now that's okay, considering Friday expiration date. It's okay. The IV, it's good enough. It's below 60. That's okay. What you look at here is you're going to be buying a 68 call. Okay, 68 call, and the last on that is 82. So I would go and change my thing to reflect that. Instead of the KMI, you're going to have a 68 call on the MO right now, with 82 as the price. Okay, so I kind of want to make a screenshot of that, and I know I'm going to lose the screenshot too. So let me just do this. Just make a screenshot of this, and then I'll just print it the old-fashioned way. There you go. Okay, that's all you have to do, really. And then you see it's got the cross. The MO, it had the cross a minute ago. It doesn't have the cross right now, but it had the cross a minute ago. So if at the end of the day it still has the cross, then it's something that we'd use. Alright, so you see we had a big gap up here on hood, and that's got a short right here. It's got a put to it. This had a gap up, that's got a put. This had a gap up, that's got a put. This had a gap up, that's got a put. So all these things that got smashed yesterday, they all had gaps up today, and those gaps usually get filled. With equities, they don't. It's not like futures, they don't fill them as fast, but they usually do get filled. Alright, let's come in here. Now, I've gone for almost a half an hour without placing a single trade yet. And look at the trades that we've had. I haven't even gotten into this stuff yet. This is the cool stuff. But I wanted to show you guys, all that stuff that had to do with options, just to get that done. Now, alright, let me slow down. Obviously, you can see that there's blue here. Let's just work with the ES right now. Okay, we just work with the ES, because it's not moving too fast. And if I move all this stuff out of the way, I might be able to find my DOMs and maybe place a trade if we get one. Wow, there's so many things in there. Alright, so this is on the 7 range ES. Now I know in the emails that went out I said I was going to go on a larger time frame, but when those emails went out, we had a whole bunch of volatility yesterday. And really I was really going to go on a 19 range ES with a 100 range NQ today. That was my plan. But then after the first 50 minutes this morning, the markets just kind of fell asleep, and the volume just went away. So here we are with these markets. This I started to describe to you earlier. Those of you guys that have been here for a while, you might remember the fade, right? Where let me shut off this part down here. Where the synthetic, it was the trigger before, but where the synthetic divergence goes down while you get an up close. The same thing works with the synthetic divergence as it did with that. But with this, it works almost exactly the same way, except I didn't have to recode this. It was already working that way. You know, the fade before with the trigger, it was initially the fade was like this. When it just faded like that, and you got an up close, it showed weakness. But with this, it actually goes in the opposite direction when you get an up close, and it really shows weakness. So it shows a reversal right there. And that is something that I can code. You know, the divergence where we have the step line in here, when it creates this divergence where it passes through it, I can't code that because it doesn't actually pass through it most of the time. You know, a lot of the times where it hits the corner, it doesn't usually pass through it where it hits the corner. This one right here would be a pass through, but like right here where it hits the corner, or right here where it hits the corner, that doesn't really hit the corner. That's an illusion. It doesn't really hit the corner there. You know, if I show you, let's just put a line on that, and I'll show you what I mean. See, it looks right here like it hits the corner as it goes into the overbought, right? But if you actually go in here and you change this to a line, see, it doesn't actually, this one, well, this obviously made me, well, it actually did a cross right there, but normally it doesn't even do the cross. but it doesn't hit anything either. It actually did the cross on that one, but a lot of times, like this right here is what you'd have, you know, as it goes into the overbought, or this right here you'd have. Now I don't know what those look like when we put it back to a step line. We'll put it back to a step line and see. Oh, you see what I mean? Like right here, it just nicked the corner right there. So I can't program that. Not in any way that is going to happen every time. But this fade thing, I can program that. Okay, and I did, obviously. So it shows the blue arrow, and the blue arrow comes out if you use it with the gray. You know, when you were going to get a gray arrow, if it does that, when you're going to get a gray arrow, it'll usually give you a full bar earlier on the black bar. Alright. Yes, John, they're in the option channel. John, the options for tomorrow are in the option channel, the TV Trades option channel. Okay. So if you're a subscriber to TV Trades and you don't have access to the option channel, just send an email to support@targetviewtrades.com. Support@targetviewtrades.com. Just put option channel in the header. Alright, if you're a subscriber. If you're not a subscriber, you need to become a subscriber. To do that, you can go to tv-trades.ai. tv-trades.ai. Just go there and become a subscriber for TV Trades. Okay, but I'll show you again. The option channel looks like this. Okay, put all this stuff in it. It's got a ton of stuff in it. It's got some videos in there. If you don't know how to trade options, it's got videos in here, and I have an option plan in here, a PDF that shows you information about options, how to actually this and this. You can watch those. If you don't know anything about options, you should check those out. Alright, and I might put those on a website too, these guys. I might put those on a website. And the mid-afternoon picks, this is the midday picks. Alright, and you're not going to trade them midday, but that's just to give you an idea of what's going on, so at the end of the day, you'll be ready to make the changes, make the trades. Alright, these were the midday results from yesterday's picks, right here, and they pretty much ended up that way. Those were the highs of those today, I think. 57%, 26%, 1%, and 7.95% were the highs of those today. But the midday picks, you know, as I just showed you, they're a little bit different now. They're going to be very much like these, except on the bottom instead of KMI, we're going to have MO. And MO is, I have it right over here, currently priced at. Well, the bid is 83, the ask is 91. So if you want to buy it right now at the ask, you'll be paying 91 cents. Well, it's 91 cents, but it's $91 to buy into it. Okay? Back to the blue arrow. Right, back to the blue arrow. So if you see a blue arrow, then a black arrow, then go short. No, if you see a blue arrow, then just go short. If you see a blue arrow, go long. If you see a blue arrow, go short. You're not going to know the black arrow is there until that bar is done. And you'll already be taking profit in the blue arrow. Okay, I was gonna make the black arrow not show up if you have a blue arrow, but what I tried to do, I was just coding it in the middle of the night, and what I tried to do is make the black arrow fade, but for some reason the code didn't stick, and it didn't fade. But if you get a blue arrow, blue arrow going down, you sell the open to the next bar. Blue arrow going up, you buy the open to the next bar. Blue arrow going down, sell the open to the next bar. It's as simple as that. Okay, how do you get the blue arrows on? You have to wait for an update. I haven't done that for you guys yet. And yeah, the stop loss, take profit, all that stuff is still the same. Jessica, there is one thing that I was going to change about the stop loss and all that stuff on a larger time frame, like on 100 range, with the reversal stuff we're doing with synthetic divergence. It should reverse right away. You shouldn't be waiting for a full bar length to go like something like this, where it goes down all the way to the end and then it changes its mind and goes all the way back the other way. The reversal signals that we do get, they should change, within probably half a bar is the worst you should have a pullback on. So what I'm saying is, like on 100 range, you don't need to have 100 tick stop or 110 tick stop or 120 tick stop. You could probably get away with a 75 tick stop. How in the mornings right now I'm trading on the 39 range. I'm actually using the bracket for a 31 range. I'm trade on the 39 range using a 36 tick stop. That bumps to plus 10 after 16 in profit, and that's working out really well most of the time. Yes, John, the blue arrow is separate from the black arrow. As a matter of fact, you could, I think, go in here and shut off the swing trade actual. That's the black arrow. Could just shut off that one. I guess I need to. Oh, it's swing trade notice. I thought I had changed the text on that last night, but I guess not. But this is the blue arrow right here, and this is the black arrow, the gray arrow, and this is the black arrow. So really, you could go in and get rid of the black arrows altogether if you wanted to, but the idea, the whole reason I was creating this was to minimize the number of those black arrows that you get in a strong trend, right at the beginning of a strong trend. The whole reason I created Synthetic Divergence was to do that. It's just, the Synthetic Divergence was to show me that the price was not going to continue in the direction it was going, that it was a reversal, and and hang on, Michael, I'll get that. The whole reason I created Synthetic Divergence to begin with was for the black arrows to show you that it was not going to continue going in the direction that you wanted it to go, in the direction of the black arrow. But then it was such a good reversal signal that I started to use the reversal, and I saw that you could use. I knew that there were other ways to apply the reversal to things, not necessarily to the trades that we're doing, but to the trades, to options. Because if it works for equities, then you can trade options, and if you have a reversal signal that happens at the end of the day on a daily chart, and you're not even stuck with a daily chart. This is something else that I wanted to show to you guys. Let me just write down. I'm going to make notes for myself to come back to this. Okay. I told you I had a lot to go over today. And I still haven't taken a trade. It's 3:05. But the whole idea was to maximize the potential of the reversal signal. The Synthetic Divergence thing, I had no idea what it was going to be when I created it. Until I created it, I knew what I was thinking when I was trying to gather time data from a different time frame. I knew what I was thinking, but I had no idea what it was going to be like because I never created it before. So then, I think I texted Jessica the night, like a few minutes after I had done it. I said, "Wow, well, I just created something. I don't know what it's going to be yet." But so we gotta, really got to go back and start everything all over again. I don't know when. I don't have everything on here, but we're on the ES right now, and if I put these guys back on here, then yeah, you could have taken the long at the open of that bar right there. You could have taken the long right there if you wanted to, Wayne. It nicked the corner right there, so you could have taken the long right there. It's too late now though. But so, Michael, you had said, how am I running sub 100 tick bar? You're here in the slow chop and you still can't dom fast enough on the 19 range. On the NQ, this is the ES. In the morning, the price is flying. And in the morning, I'm on a 39 range on the NQ, and it is still flying in the morning. Yesterday, I only traded 3 times because the spread was, well, I only traded 3 times on the NQ because the spread was so wide that I didn't want to trade it. Please comment on the blue arrow and the Synthetic Divergence and the range trigger. What if they conflict? The blue arrow comes from the Synthetic Divergence on the range trigger. Okay, that's what actually creates it. Down here, if you wanted to, hang on, I'm trying to find Mark. That was you that asked that. Okay, there's a lot of questions coming in. So if you wanted to, you could just get rid of that down there. And now the gray arrow does not necessarily lead to a blue arrow, right? You can have a blue arrow. The blue arrow happens in place of a gray arrow, right? Every place there is a blue arrow, there would be a gray arrow, right? If I shut this off and I turn that on, every place there is a blue arrow, there would be a gray arrow. Just a lot of times, you can see the gray arrows. If you could enter on the gray arrow before the black arrow, if you knew to enter on the gray arrow before the black arrow, then you could enter up here instead of down here. Right? Over here, you could enter down here instead of up here. And that's what I was looking for. And that's what we can do now with the blue arrow. Okay. Yeah, if you're on the... Well, I'm not on the NQ right now, and I don't trade the NQ. I wanted to look at the NQ on 100 range today, Michael, but the volatility died off. So, I mean, over here, I think it's on... That's on a 19. I wouldn't do it on 19. I'd do it on the 39. Like right here. That just gave a blue arrow to go long. Now, you can just click in the green right there. Yeah, I'm sure there's a lot more movement on the crude. It's probably full margins on the crude right now, too. I haven't traded the crude in a while, JS. It's been a while since I traded the crude. Okay. Alright, so I did take that NQ, just right here. I just took that NQ. Okay. I'm in pretty good spot. After 16 ticks in profit, the stop will go to plus 10. Alright, this is our first trade in this session. Let me put the window here. It's got a 36 tick stop on it. Okay. So this over here on the S did not give a trade. Okay, did not give a trade yet anyway. And alright, John, will we be able to set an alert for the blue arrow? Yes. Yeah, I actually created the alert for it too. This morning, the wee hours of the morning, I created the alert for it. We're just about to get bumped over here. It's got to go to... What the heck, man? It's got to go to... I have so many things open with the same ID. That's why it keeps doing that. It's got to go to plus 16. So when it gets to 70 and a quarter, right there, it'll bump the stop to plus 10. But John, yeah, I did create an alert for this. And if you go here right now, the alerts in here... Well, it might stop me out after all. We'll see. Yeah, it did stop me out. Okay, so that was minus 36, right? Now it gave 2 blue arrows here. I think I got a pretty good entry on that. It didn't give me enough room to get the stop to break even. That's unusual, but it happened. What I want to show you is add alert. The alert in here is going to be called... It's going to be in there, and it's... I got to change the name of it, but it's going to be... I think Synthetic Alert or something like that is what it'll be called, and you'll be able to just do it in there. Right, choose it like that, and you'll be able to buy. You could do any alert, but you don't want to do that. You want to choose whatever it is, and you'll be able to do it in there. I thought I had done that. This might not be the version that I did it on. So we should have just been long right here on the ES at the bottom of that bar right there. We should have been long on the ES, and I think we should have been long over there too. But let me go put in the stop out that we just had. Okay, that was on the NQ, and that was minus 36 ticks. And so far, 1 trade and 1 stop out. Okay, that's where we stand right now. So I mean, we have plenty of time to get that back. I'm not worried about that at all. Now the black arrow is actually going to trade here too, but you see how the black arrow right here, we just crossed right there. You have a synthetic divergence short going on right there. That's why I created the synthetic divergence, to tell you when you shouldn't take the black arrows. So you shouldn't take that black arrow. Okay, as a matter of fact, you could short it right here if you wanted to, going in the other direction. But yeah, John, when I do get it out to you guys, let's just bring it over to show you I was at plus 10 on the short. When I do get it out to you guys, it will have an alert on it. Okay, and I'll make it so you can turn the black arrows off and the black arrows on, and the blue arrows off and on as well. Okay, so I don't know that I actually got 10 on that. Let me go see. I actually got 11 on it. Oh no, that's 9. That's 9. I got 9 on it. Sorry. Okay, so that becomes minus 20. Oops, 27. And now 2 trades. Alright, let's get back in here. We can trade some more. You guys remember the mid-band stuff? The purple arrows are the ones that straddle the mid-band in the direction of the mid-band. That's where you want to trade. Okay. And I don't have the white ones turned on right now. This will come to you as a purple update to existing indicator. When I finish it, John, yeah, it'll be on the TVT swing bands. That's where the purple thing will be. Okay. Masood. You missed it. You missed the whole thing. I've been talking about it for half an hour. The blue ones happen when you get a fade of the synthetic divergence. Okay. They happen when you get a fade of the synthetic divergence. They happen before the black arrows. So you would get it here. The blue arrows actually replace a gray arrow, typically. Alright, so I took one blue arrow over here. That stopped me out. And I took the reversal right here. The synthetic divergence reversal right here. I shorted that and got 10 ticks on that. Those are the 2 trades that I've done so far. But the blue arrows, I created them so that you could see an opportunity to get in before the black arrows actually happen. And you can go in and, when I do create this for you, you can go in and just shut off the it's called swing trade actual. You can just shut off the black arrows if you want to, like that. So you only have blue and gray. And you can shut off the gray too. Usually the gray are going to happen around the blue arrows, but there's no guarantee. I mean, the thing with the black arrows is you're always going to have a gray arrow before the black arrow. That's the thing about the black arrows. And the blue arrows and the gray arrows, they actually override each other. Okay, every blue arrow is also a gray arrow. But you can't see the gray arrow because I made the blue arrow bigger. Because it's more meaningful. Okay? So, so we're just waiting here, waiting for some other opportunity to trade. And let me put the synthetic divergence back on here on the ES. So that was another thing that you missed, Masood. Inside the TV Trades range trigger, I made it so that when you click on synthetic divergence, when you just put it on by default, this is what it looks like. It looks like this, okay? And then when you go in, you put in the password and you just click on synthetic divergence, it updates everything. It puts the synthetic divergence on, it makes it a step line, and it updates the bar colors. Okay. No, Hal. They all work together. The range trigger, the synthetic divergence inside the range trigger is what creates the blue arrows. Okay, that's what creates it. See, this one right here, it didn't cross the blue on it, so we don't have a trade right there. Now we have a black arrow right here, but again, it hit the synthetic divergence right there, so you could short it right here, taking the synthetic divergence short instead of taking the black arrow long right there. Okay, again, that's why I created the synthetic divergence, to stop you from taking the black arrows that are likely to stop out when you're in a strong trend. Okay. I know, that's a lot of information. It's just a lot of information. I know. Alright. Let me see who's all in here. The group of people that we get in here seems every week just a little more diverse. If you haven't taken a free trial, go here to TV-trades, tvtrades.ai. You can go to tvtrades.com and tvtrades.ai, targetviewtrades.com. If you ever are not signed up for the webinar, the weekly webinar, you can always go here to targetviewtrades.com. Click on this. I know right now it says 225, but if you actually click on it, it'll show you the ones that it's still got available for it, March 4th and March 11th, so it's got next week's out there already. So you can go and sign up for next week's in here. Okay, right now. I know I didn't update this last week. I can't believe I didn't update that. That's one of the things I do every day. Not every day, but every Wednesday. Okay, so right here there was a divergence, a synthetic divergence short you could have taken right there. I think that went enough to get the stop to break even. It would have had to go 4 points on the 39 range, so 46 down to 42 is what it would have had to do. And from the open at 46 to low 41.75, so it went enough to get the stop to break even. This right here could be long right here right now. That kind of nicked the corner. It didn't really hit it Didn't really hit it very well. I guess it didn't hit it at all. It's not really a good synthetic divergence trade. Remember the purple arrows are the ones that straddle the mid-bands. Those are trades with the trend. Okay. And the white ones, I don't even have the white ones turned on, but if you turn on the white ones, they happen on a deeper pullback with the trend. Right? Well, here, a deeper pullback with the trend. So, right here, they end up fully on the other side of the mid-band. But there are so many things now, I don't want to give you too many things. So for today anyway, for right now, we just stick to this stuff. Okay, the synthetic divergence and the blue arrows. We'll just stick to that for right now. Because I know it can get overwhelming, there's so many things. How about you manage the machine ID fiasco? And we slap this down in yeah. No. They actually came up with the thing, the machine ID thing, Michael. Ninja did, and I'm working on getting that whole thing figured out. They have a new thing that's supposed to. You have to be on the very latest version of NinjaTrader, and they have a thing that's supposed to sort of replace the whole machine ID stuff. I started working on it. But I got sidetracked. Well, I didn't get sidetracked. That was a sidetrack. So I put it aside. It's been available since November, I think. And I don't know how well it works or anything like that. Yeah, that's what I was saying, Peter. To activate. That's the new thing. But how do you turn on the blue arrow? It's not available to anybody yet. I just got it out there and I'm testing it still. But it works great. There's no reason it wouldn't work great. It uses synthetic divergence and it gets you in before the black arrow. Before the black arrow finishes, it gets you in at the start of the black arrow instead of the end of the black arrow. Okay. But I will have it available to you pretty soon, Mark. Okay. I want to remind everybody, I am going to be going away the 16th to the 20th, so that week we're not going to have a thing on Wednesday. Whatever, the 16th, 17th, 18th, I guess. The 18th, I won't be doing a Wednesday session on the 18th. Okay, I am going to be away. And unable to do that Wednesday. I'll have my laptop with me, so I'll still be able to give you some updates and stuff, but I am really going to try not to do too much work that week. Yeah, John. Yeah, I could put that out tonight. Really, I just want to make it. I just want to make it better, It's because I wrote all the code down here. The majority of the code that I needed for that, I wrote it all down here, so I could copy it out of there and put it up here and just combine it with the gray arrow code is what I had to do. But getting it right so you have the alerts that trigger when they're supposed to trigger and all that stuff. Getting the names right. You can see right now I have the name wrong in here. I have two of them that say swing trade notice. And one should say synthetic divergence trade notice or something like that. And the alerts didn't end up being named properly, so I gotta fix that too. But again, I'm doing this stuff at 3 o'clock in the morning. Alright. So, 322. We should start getting some trades here pretty soon. Volatility should start picking up. Now, I had really planned on trading this on 100 range and this on 19 range, but the volume just died off today. So we'll go back. Let's go back here really quick and see what we have for these. If you haven't seen this, anybody that's come in late, if you haven't seen this, you can get to this. This is the options, right? And this is updated in real time. The options that will be the start of what you'll be looking at for tomorrow. Alright? Again, when you get it like this, then you have to go in here, go to the symbol. You have to have the trigger on with the synthetic divergence down here. And again, to put that on, you only have to put on your synthetic divergence and put on your trigger, and then check the box that says display synthetic divergence. As long as you have the password in there, it'll do the rest. And what you have to do is just make sure you have the synthetic divergence line crossing the blue while the blue is in the cover, crossing the blue as it goes outside of the cover. Like that one, all these right here did it. Alright, earlier. The thing about this right here, see how the blue got out of the cover right there? That's not really as good of a trade right now. You want that blue to stay inside the cover. Okay. So you see MO just got a little bit better than it was a minute ago. A minute ago it had changed just a tiny bit. But that's what you want to see right there. You want to see that. You really want the blue to be inside the cover. That, and that. Okay. So when you see this information right here, that's just a start. You gotta go check all those things with this. Just gotta check and see if you got that cross with this. And then when you get that, then you go check the option prices. Alright. If it's colored all the way across like this, that means it's with the trend. If it gives you this like that, I mean that means it meets the minimum requirement, but it's not with the trend, it's against the trend. The difference between the ones with the trend and the ones against the trend, just click on it, Wayne. Here, I'll do it right now because I'm going to forget. The difference of the ones with the trend and against the trend is the ones with the trend, you know, you can hold on to those a little longer. If they don't work out right away, you can hold on to them a little longer because they're with the trend, so eventually they'll go in the direction that you expect them to go. Right? If they're against the trend, if you take any of these that are against the trend, you want that first pop in the first few hours of the following day. You want to get that, and if you don't get it, it's against the trend and you don't get that pop in the first few hours, you should be looking for an exit on those because it's probably not going to do it. Okay, that's the difference. Suggest if you can hold them for tomorrow, I take out the trade today. They're in the negative for now. I think they're on one of my lists over here. Okay, I think they're on 3. What'd you say? That was PG. PG. Procter & Gamble. And that was, when you did that, it was a long trade, right? I don't think that one's going to come back. Yeah, it even went further down yesterday. It went up yesterday, but today it's gone up a little bit. But I don't think Procter & Gamble's going to come back. And the GLW is right here. That one could actually work itself out. Okay. Was the end of the day picks place at the end of the day or the next morning? I try to get them out at the end of the session, Nolan. And they're in the Telegram channel. You know, I've already shown you what I picked so far for today, but the one thing that's changed is the KMI. That's going to be MO. It's going to be MO, and the price on the MO is, it's going to be the 68 call on MO. The last was 82. Okay. Alright, so Robert G, these are the weekly options, okay? And the stuff that I've been telling you about, you can go out here into Telegram and see. These are the results from yesterday's. These are the results from the day before with all that, you know, all the calls that we had, not all the calls, but most of the calls that we had got smashed when we had that huge down day yesterday. But that's why they're options, you know, the maximum you risk is what you have, is what you paid for it. We got all these right in here. They were great returns. And there's more of them, all those. If you look at it, I think it's over here.
Good afternoon, everyone. Happy Friday.
Oh, no, that's a video.
I just want to make a quick video.
Crap. Hang on. I gotta shut it off. It's me talking in the background here. How do I shut myself off? There it is. Alright. You should watch the videos in here. I have a couple of videos about options right here. Watch this one. It goes through how to pick the options and all that stuff, picking the strike price and the expiration date, delta and the implied volatility, days to expiration, all that stuff. You should watch this video in here too. Okay, it's all out there in the Telegram channel. Alright, let's see if we can trade some more. Can we still trade that? That is the NQ. Where's my NQ Tom? Crap, I just messed that up. Where is my NQ Tom? Here There it is. Now I don't know, did that go enough into profit where it would have bumped the stop already? 44 down to 41, I guess not. Okay, so I took it. Here it is. Here it is. So now it just bumped my stop to plus 10. And now I'm out. Okay, that was that one right there. Now, the swing trades in here are not, they're based on the old swing trade tool by itself. Okay, so when you see those things popping up, I have to update the things that are triggering those. Like the stocks and ETFs, Robert G. The stocks and ETFs you gave me a year and a half ago were the ones that are in there. And those are based on just the TV trades indications. Blue and the red arrows. Old school. Let's go back here. That was another 10 ticks we just knocked out there. Alright. So, do we have anything else to trade right at the moment? Nothing right at the moment. Okay. Whew. That was a lot of talking. F and BAX. They don't appear to be valid. Ford was in the list, I think, for tomorrow. I think, wasn't it? Oh no, it got taken out. This one. Let's do F. Nope, Ford's no good. And BAX. The reason Ford is no good is because you didn't get the cross right there. Okay. The reason it shows up is because, actually it's not showing up anymore, but when it did show up, it was because that came out of the overbought and that was within the cover. But if you look at BAX now, that's no good either. Neither one of those are any good right now. Okay, you see you didn't get the cross inside the cover. Okay, so this is the ES right here, giving us the blue. So I just shorted the ES right here. Okay. And we'll see where that goes. The ES has a 10 tick stop on it. It goes to break even after 4 ticks in profit. Okay. So it should get all the way down to the other band down here, is what it should do. But if I put this window on top and we throw the mid bands on, it's going to go to break even after 4 ticks in profit by itself. So there it is at break even. Let's just lock in 1 tick on that. If I put the mid bands on here, it'll give you one sort of target area for that. There it is. There's an additional target area for you right there. Okay. And that's down here at 82.25. 6, 8. It's $1,000. Okay. Pretty easy trade right there. Yes, 8. So 4. I typed that in the wrong place. Oops. That should be on the ES. Here it is, 8. There we go. Alright, so now we're positive on the session anyway. Alright. And it did go all the way down to the midpoint. And so this right here is, it's not suggesting it's going to reverse right here, and it's a midpoint. It's a straddle of the midpoint. That's what the purple means. This is so you could trade with the trend if you wanted to right here. That's what the purple means. Okay. And yes, the blue arrow is, I think you guys are going to find that it's going to be a big help. A big help to everyone's overall profitability. And I made it, you know, when I was doing it last night, the black arrows work really well. But the blue arrows are there to get you into the black arrows even sooner. You know, being able to get in right here instead of up here is huge. I mean, that each bar by itself is enough to get the goal for the day. So it's, you know, it's a good thing. I think it's going to work out pretty well. I think you guys are going to like that. So this is actually a divergence long trade right here on this bar. Okay, on the ES. Right here. Synthetic divergence long trade across the blue. Got to the bottom of the cover. I am actually in that, but I'm in it from the purple right here. It's just a break even for me right now from the purple. Okay. So, we'll see. That right there is actually a short. Divergent short. So, when you get conflicting signals like this, generally my rule of thumb is stick with the first signal. That's my rule of thumb. Yeah, we could bail out here. How much time do we have left? We have 27 minutes left. It hasn't gotten to the point where we go to break even yet. So, the NQ does not have conflicting signals. Okay. That's a synthetic short right there. It's not conflicting. Is there a way to disqualify that trade short, or is it just a stop out? On the most recent one right here, this one, I'm not even sure that would have been a stop out. Yeah, I guess it would have been. It would have been a stop out to the tick. It might have gone to break even right in here. It depends where your entry was. No. I don't know. I have two trades on right now. I have the CS trade and I have the NQ trade right now. Right, this is a short and this is a long. This was the synthetic divergent short right here, and this was the purple arrow long. I mean the purple bar long over here. So I don't know how they're going to work out. Neither one's gone enough to get the stop to break even yet. The markets are starting to get a little jumpy right now. So this is going to go to break even, and it just went to break even plus 10, and it just took me out. Okay, that's that one. I don't know that it actually gave me 10 ticks, but that's that one. So we're out of that one. And now we have the ES that's been working here since back here. Okay, I actually got in right there. The 375 was right there on the purple. And it's still working. Blue arrows. If you do them just outside the bands, Mark. You know, when they're supposed to go with the black arrows outside the bands, then that's a thing. Let me just go see what I actually got on that NQ. I don't think I got the full 10 ticks. 7 ticks is what I got. 7. It's already on top. So the CS trade is taking forever. Let's get back in here. Alright. You don't set it up yet, Gordon. I haven't created it for you guys yet. It's in this swing band thing right now, the 6T one. That's a development one that I use. Okay. Alright, so we're waiting. I think I answered everybody's questions. If anybody asked a question and I didn't answer it, can you type it in again? Anybody? Everybody? Okay. Right now, yeah, Gordon. Yep. I wanted to show it to you so you guys can see it. And you know, I could have it out as soon as this weekend. There's some detail that I need to put in there. The question is only take the blue arrow outside the band. We're almost going to get bumped to break even over here on the CS. The question is only take the blue arrow outside the bands. That is certainly going to go to one tick on the ES. We waited this long. I don't want to get a break even on it. It should make it all the way up here to 89 is what it should do. Okay, all the way up to 89 right here. It's probably going to take us out with one tick, but the blue arrows work well pretty much anywhere, Mark. But if you're coupling them with the black arrows, and the black arrows are for outside the bands, right? But you know that. Now 87.25 is what I was trying to get up to. We should have 2 ticks. We should have a pretty good run there. I was thinking on the ES. But 2 more ticks on the ES. Put that at 10. And this at 6. Okay. So we're back to positive after that stop out, that first stop out on the NQ. And this, we took that short and we got 10 ticks on it. We took the purple bar there and we just took profit on that. That did get up to what I thought it was going to be up to. Yeah, 89 is what I was looking at. Now what I was looking at, guys, in the DOM, this number right here, that's an anomaly in the DOM. It's trying to get to that number. Okay, now it might have a pullback before it goes up. Before it goes up that high, it might have a pullback, but we don't know. Okay. What I was saying earlier, Mark, if you're doing the synthetic divergence, with the synthetic divergence, you shouldn't have big pullbacks. Okay, this is not a trade right here. With the synthetic divergence, you shouldn't have big pullbacks. So with 100 range, you could probably get away with like a 75 stop. 75, 80 stop instead of having 120. Okay. I'll show you what I mean. The NQ doesn't have anything right here, so let's just do this. We'll bump this up to 100 range. And what I want you to look at is whenever we get a signal like this one right here. See, that dropped down about 5 ticks. This one right here, that went up about 20. This one right here, that dropped down about 2. This one right here, well, that one actually dropped down a lot. I'm not really sure that was one. This one right here dropped down about 2. This one right here went up about 15. So you don't need a huge stop with the synthetic divergence trades because they usually reverse right away. I don't know what this is right here, but it looks like it probably reversed pretty quick. Yeah, see. That one, from the close of this bar, it gapped up, but then it went straight down from the gap up. Alright, you see what I mean? The question was, how big of a stop do you need for 100 range? Okay, that was the question. Sorry, I was just answering without telling you guys anything. Like right here, it went down about 5 ticks maybe. Right here, went down nothing. Right here, went up nothing. Right here. That one went down a little ways. That looks like about 20 or 30 ticks right there before it went up. Maybe even more. 40 ticks maybe. This one right here, that was a pretty good pullback. But, you know, if you had a 75 tick stop, you'd have been okay on that. This one right here, that was kind of a good pullback right there. 70, let's say 66 down to 56, 10 points, 40 ticks right there. You'd have been fine. You see what I mean? When using the synthetic divergence trades, particularly on a larger time frame, like right here, no, you don't need to have a huge stop. Okay, on the 100 range. This is a short right here on 100 range. But it's already gone down from 49.50. It's already dropped all the way down to 35. So it's done everything that it should have done already. How do you catch a nothing? You mean a stop? You just gotta wait for the bar to close. When the bar closes, you just enter. The question was, how do you catch a nothing? You mean one of those ones that, like this, if that were a trade right there. One of these right here, if that were a trade. How do you get into that when the bar closes? Well, you enter. I would just click on the green, and that would put me in a limit order at the current bid. You know, usually it's going to pull back a little bit. That was what you were talking about, right? Yeah, if it zips off a little in the wick, then you're not going to get it right there. You'll get it like right here instead. But you're on 100 range and you have a 75 tick stop. You know, those 5 ticks right there at the beginning aren't that significant. I totally missed these blue arrows right here. I think I missed some blue arrows. miss. I didn't miss those blue arrows. Alright, well, let me put that back down to a smaller time frame. Okay, we're not sitting on 100 range right here at the end of the session. We have 17 minutes left, so we should have some more trades coming up in here over the next few minutes to get us up to a pretty good thumb. The black arrow had a synthetic divergence, alright. Which one? Back on 100 range a minute ago, Michael? My DOM is set up for 39. Oops. Yeah, my DOM is set up for 39. You are right. So I couldn't do 100 range trade in there because my DOM is set up for 39. You are correct. So let's go back here to the 39. Thank you, Philip, for reminding me of that. It's actually set up for 31, but that's what I'm using on the 39. And it's working, so I'm going to stick with it. Oh, the other thing that I wanted to show to you guys. I just looked down my list. The last one that just happened on the 100 range. Let's go back here to the 100 range really quick. Okay, so we had a black arrow there that worked out fine if you were taking the black arrow. The blue arrow right here worked out fine right there. This blue arrow worked out fine right there. And the black arrow worked out fine right there. So all three of those gave great profit. Okay. Every one of those pulled back enough for you to get into. Every one of those. Okay. On the 100 range NQ, does the red have to hit the top of the blue cover, as we had two of them close? Close. It's got to get to the edge like this right here. It's just got to get to the edge of it like that. You don't want to have it inside like that or inside like that, but right at the edge like that. I'm okay with that. It doesn't have to hit this line or that line. It doesn't have to hit the 95s or 90s, whatever I got those set at. Okay. But it had the synthetic divergence, so you're supposed to be short on that black arrow. Okay. You're mixing things up. On the black arrow right here, it did have synthetic divergence right here, so you could have shorted right there using the synthetic divergence. If you were taking the black arrow, the reason I created the synthetic divergence was to know when not to take the black arrows. Alright, so you wouldn't have taken the black arrow there because you had synthetic divergence, but you could have shorted it right there and taken profit on the short. Alright, is that what I did? Did I do that? What is that at? I did do that. I think, didn't I? No, I didn't do that. I'm trying to see, I got things all mixed up in over here. I was on 100 range and I didn't have my DOM set up, so I didn't do that. Okay. But yeah, this right here, Michael, because it had synthetic divergence, you wouldn't have wanted to take the black arrow right here. You wanted to take the synthetic divergence short right there. And that synthetic divergence short went from 49 all the way down to 35. So say 36, it went 13 points. So you had just about 50 ticks, 45 ticks in there that you could have taken on that. Okay. And this blue right here you could have taken, this blue right here you could have taken, which would have been this right here. You would have bought the open of that, you would have bought the open of that, and then with the synthetic divergence you would have sold the open of that. The synthetic divergence. The reason I created the synthetic divergence is so you know when not to take the black arrows. Alright, now it worked out. The black arrow, if you had a big stop on that, the black arrow would have worked out anyway. But you would have first gotten this trade right here on the synthetic divergence trade. Okay. Well, I mean, you can take the 10 ticks, but I have the 10 tick thing in there just so I don't keep getting 4 ticks, or less than that. And I don't do the 10 tick thing on 100 range. I do the 10 tick thing on the 39 range. Okay, on 100 range, I'd have something much bigger than 10 ticks. Alright. So okay, the S has a synthetic divergence long right here. Okay, right here, synthetic divergence long. Here it is. Okay, the NQ does not have anything, but the S does. And the S is trying to get up to this one first, and then that one. So we'll see what it does. it is now 3:48, so we have 12 minutes left, and these 12 minutes are usually when the trades start popping off pretty quick. Okay. So, we'll be ready for him. Try to be ready for him anyway. That window on top. This window on top. Okay. So we don't have any trades here right now. And if we get an up close on this bar, it's actually going to signify a synthetic divergence short. No, it isn't. That'll be way down there. It won't be. So that's what we're looking for. We're looking for this to get up to the mid and up to the outer band right now. Right. That's not a trade here on the NQ. And so just to kind of keep things in check here, let's just take the mid-bands off for right now. Alright, so you're not looking at too many things, it's just too much to take in. The ES is just crawling around. Yeah, that's what I was just talking about a minute ago, Michael T. The risk management on 100 range using synthetic divergence. The stuff that's on the web page for the 100 range, that was for using sort of like the black arrows and other ways of entry. But the synthetic divergence trades are reversal trades. They should not keep going, like, have huge wicks on them against the direction that you want to trade. They should go right in the direction that you want them to trade. Like this one right here on the ES right now. I had a feeling I was going to stop out because that's just how it should work. Okay. When you get those trades, it should happen quickly. Now it's 350. I don't know what just happened to make that jump around like that. But that was just a stop out. We're going to put that in on the Wednesday totals. And that brings us down to 0 there. Okay. And that's a 7 here and 2 stop outs there. So we're now negative a little bit. Gotta get back in there. We have 10 minutes left to play some trades here and make some money. We should be able to do this with no problem. Let's see. That actually right there was a short trade that I missed on the ES. This is not a long trade on the ES. This, okay. I'm trying to keep track of everything that's going on right here in front of me and answer your questions. Right. So that's not a trade on the ES. That kind of is a trade over there on the NQ, but it's already gone enough into profit to pump that stop. I can't tell if that blue is in the blue or out of the blue right there. Right there. Right here. Oh, hell. I'll just take it. Let it go. There. So that one just gave me 10 more. Or it should have been 10. And it actually gave a short right there, and now it's giving another long right here. They gave a short right here at the top of that bar, and it's giving a long right here at the bottom of that bar. Okay, so that long, I didn't get the short, but I got the long. So we're at, I don't know, hang on, I gotta put those in. There's a 10, and that looks like a 14. So we'll go here at 24, and that puts us at plus 14 there. And 2 more trades there. Go back over here, and this one's still going right now. That's the one that I just did. So there's lots of opportunity. I took the mid-band stuff off of there because there's those other 2 trades that are popping up on the mid-bands that are just too much to look at, really. Okay. That, right there, that's the trade that we just did, and we just took 10 ticks profit on, I think. Right? I don't keep looking at the same thing. Was that the one that I just did? I took 10 ticks profit on that. I took 14 ticks profit on that. Okay. Makes sense now. Alright. So this is not a trade here. And that's right at the edge of the cover on the NQ. It's right at the edge of the cover right there. I'll blow that up. See, it looks like it's right there at the very edge of it. Yeah. We're in it to win it. See what happens. It hasn't gone 16 ticks yet. We'll see if it does. This is not a trade on the yes. Not a trade on the yes. And that's a 36 tick stop on the NQ. And it's actually given, it's not exactly out of the cover right there, and that's why it's not the ideal trade, but we'll see what happens right here on this bar. It's either going to stop us out or it's going to give us profit on this bar and stop us up. Okay, so that did not turn into a trade there. It's not a trade there, so let's go put that one in. It kind of wipes out our NQ again. That is, what's this at, minus 22 on the NQ. And 10. And 3. Okay, let's get back in here. Get ready for more trades. On the NQ39 range, you get a short signal on divergence. Our reentry should be about... I don't know what that question was. Wayne, exactly. 10 points higher than what? That I just took that and it just gave me 10 ticks. The blue arrow right there. I'm sorry I didn't bring it over and show you. Let me see. I think it gave me 10 ticks. It was 43 down to 39. So it was actually more than that. It was 18 ticks. Oops. I don't write it down there. That was over here. Let's see totals. 18. That puts us at minus 4. And this at 11. What time is it? 3:55. We have 5 minutes left. We should be able to get positive anyway. I don't... Oh, you're talking about where to put the buy stop limit and sell stop limit. On the 39 range, yes, that is correct. That is correct. If you put your order on ahead of time, then that is correct. Okay. The ES didn't give us another trade yet. This blue arrow back here worked out pretty well. That one gave enough to get your stop to break even. This one, I think I took 10 ticks on, or 14 ticks I think I got on that. Here we are right here on the NQ. This is a divergent short right here on the NQ. Here it is. There's 10. There's more than 10. That's 50 right there. There, and that's 50. Okay. We needed that one. That puts that at 46. And this at 12. Okay, that's not a trade there, that's not a trade here. So neither one of those are trades right now. That was a synthetic divergence short that I just took there. Okay. We have 2.5 minutes left. Let's see, where are we right now on the session? We're up $2,300 after that last trade on the session. We still have time. We have plenty of time to have at least one more trade in here, the way things are right now. You know, they get so fast here at the end. Right. Does anybody have any questions that I didn't answer at this point? I want to make sure I answer all your questions. And again, the blue arrow came from the synthetic divergence. The reason I created the synthetic divergence was to let you know when not to take. That's not a trade here on the NQ. It didn't hit it right there. When not to take the black arrow trades. Like that one a few minutes ago. This one back here. When not to take the black arrow trades. And take the synthetic divergence instead. Okay, or when it's okay to take the black arrow trades, like this one right here, that was okay to take. But that already had the blue arrow on it, so I keep trying to make it better, not more complicated. You know, you can see you got to kind of pick something and trade it. And right now, I took off the mid-band stuff because there's plenty to trade with just this stuff that we have here. These 2 or 3 things that we're looking at here. We have the blue arrow, we have synthetic divergence, and we have the black arrow. So we're looking at 3 possible trades here right now. Right? So the black arrows that you wouldn't take would be the ones that have synthetic divergence with it. Right? That one didn't. That one didn't either. But okay, so and the synthetic divergence trades that you would take. Well, there's one right here, another synthetic divergence trade that's triggered. Let's go to a plus. I don't know what that ended up being. It was about 15, I think. That was a synthetic divergence long trade right there. Okay, and there was a blue arrow right there that I didn't see, and it's time to wrap it up. Black arrow right here, that has synthetic divergence, so you wouldn't take the long right there, you would take the short right there. Because of that synthetic divergence, you would take that short and not the long. Okay, you see that? That's why I created the synthetic divergence, to know when not to take the black arrows. So you would take the short there, you would just add that profit right there, instead of having the stop out with the long black arrow. Alright, so I got 15 more ticks on the NQ there. I think it was 15. Let's see what it actually was. It was 13. Okay, so that puts us at 59. 59 there. 13 trades there. Alright. So this is how we're going to wrap it up for this session. 29.50. So we didn't meet our average, but I did talk a lot in this session. I didn't trade all that much. Well, we did get 13 trades off, but it didn't feel like I was trading all that much. Alright, so let's do a quick recap of everything that we went over here. Okay, today. First, if you haven't taken a free trial, go here to tv-trades.ai, tvtrades.ai, and sign up for the trial. Sign up for next week's webinar. You can go here to targetviewtrades.com. I know it has this Wednesday 225. You can just click on that. It'll sign you up for next week's if you're not already signed up. Wait, what else was going on there? Where was I? I was here. Okay. The stuff that we went over today. The blue arrow. The blue arrow is designed to get you in before the black arrow happens. Get you in at the start of the black arrow. Start of the bar that has a black arrow. Or it could be all by itself, like this over here. I haven't distributed the blue arrow to you yet, okay? I haven't distributed it to you yet, but I will. It will be soon, okay? I gotta straighten some things up, clean up some stuff. It's not coded perfectly right now. The synthetic divergence, obviously, what you're looking for with the synthetic divergence is for this to cross through the blue while the blue is in the cover, the background cover. You want the red synthetic divergence line to cross the blue and come out of the cover, or at least get to the edge of the cover, like it did right there, and like it did right there. It doesn't have to go all the way up to the line right there. Okay, it doesn't have to go all the way to the line. It doesn't have to begin outside the cover. All right, it can happen from inside the cover like that. On a bigger time frame, I'm doing a recap of everything we went over. Okay, on a bigger time frame, on 100 range, you don't need to have a 120 tick stop. You could have like a 75 tick stop if you're doing synthetic divergence, because the synthetic divergence should be quick reversals like that, all right? And quick reversals like that. It shouldn't pull back, more than 75 ticks. If it's going to go in favor of your trade, it should go in favor of your trade right away. All right. The blue arrows we discussed that. The black arrows, if you have a black arrow that has synthetic divergence, like this one right here, that has synthetic divergence where it crossed the blue on the way out, you don't want to take that. Take the reversal. Don't take the black arrow. Take the reversal. Okay. That's pretty much it in a nutshell. That's what we covered, I think. Alright, so all this stuff will be in the video. You can watch the video later. The videos, guys, these videos end up in the YouTube channel, and if you go to tv-trades.ai, the playlist that I have, the last video in the playlist will be right here, okay? But you can always click on this right here and view the full playlist, and that'll bring you out here and you can see everything. All the videos that I've made are in here. Hundreds of them are in here. Okay, all the videos that I've made, you can go through and watch all those. And you can see the time of them, like the short ones, they're telling you stuff that's pretty good information. There was one that I did this week, this one right here. Updates picking strike expiration. It's got the DT, the delta, and the implied volatility. If you don't know about options and you want to know about options, you should watch that one. Okay, watch that one right there. It's 10 minutes and 39 seconds. Watch that. Okay. You see, we have all these things in here, all these videos that I've done, and these Wednesday ones. Every single one of the Wednesday ones that I've done is in here. So for the past however many weeks I've done these, they're in there. Today in this session, we ended up plus 29.50 with 10 contracts on, or 295 with one contract. So it brought this number down a little bit today, but we're averaging $4,400 per Wednesday session over the past 43 of these Wednesdays that we've done. Okay, so even if you only came and did these Wednesdays with us, you know, you'd earn what it costs to become a subscriber. And that's it. I am gonna, what broker DOM am I using? Ron, for which thing? For futures, I am using StoneX as the broker. The DOM is Sierra. I use a Sierra DOM, and it's a real pain in the neck to set that up. But I use a Sierra DOM because the Sierra DOM is awesome. And I use StoneX because I get good rates there, and I've had my brokerage, well, it was originally with Daniel's Trading, but I've had my same broker over there through the past 4 iterations since they've been bought out and bought out and bought out and bought out. It's at StoneX now. The option stuff that I showed you, that is Charles Schwab. It's a Schwab account. And that account that I showed you, it's got $5 in it, so it's not worth trying to hack into it. You know, I created that account just to show you how options work, how you can put the orders on and all that stuff. Okay, so like right here, I mean, you could still trade the NQ right now. You know, the NQ's got a short. I'm sorry, that's not the yes right now. Sorry, the yes has a short right here. Well, the NQ kind of has a short too, but the yes has a blue arrow short right here, so you could trade that right now if you wanted to. The DOM doesn't really suggest anything on the downside on the ES right now. The upside, it says it's going to pull back a little bit to 74, but that is it. Now let me shut off the recording in here. Again, if anybody has any questions, you all know how to get in touch with me. To take the free trial, go to tv-trades.ai, tvtrades.ai, and sign up for the trial there.